Hi, so today we're going to talk about Fineotex Chemicals. So I've prepared a presentation today as well. So Fineotex Chemical is basically a specialized chemical manufacturing company which is right now in India, Malaysia and US. Okay. So it deals in specialized chemicals. I'll brief you about it. So it's a 50-year-old company, okay, founded in 1979. It deals in 470 specialized chemicals, okay. It's in 70 countries as of now, and 63% of decent promoter holding, which I like. So it deals in textile and garment chemicals, as you can see, water treatment. So textile and garment chemicals is the main core business of this company. It's from where it was founded. Then the promoter has mentioned in an interview recently that the four main core businesses of the company is textile and garment chemicals, water treatment, oil and energy chemicals, and FMCG. So in FMCG they make hand washes, not hand washes, but like sanitizers and stuff from chemicals. For oil and energy chemicals, they have signed an MOU with the US government. So they've made a $11.5 million deal as of now, and they're expanding there. So they are in partnership with a firm, Fineotex Chemicals, and under that they manufacture chemicals in the US, specifically Texas. Okay, and water treatment is one of the main sectors it's growing in right now, which I like because wastewater management is one of the most in demand upcoming theme. Okay, then it's in 3 countries as of now with capacity of 200,000 million tons per annum, which is quite a lot for chemicals. Okay. So in India it's in Mumbai, Maharashtra basically. It's also in Malaysia with a wholly owned subsidiary since 2011, okay, in partnership with Fineotex. And in the United States it's also under a subsidiary, and it has increased its production since the past 1 year, almost doubled it. So as you can see, since the USD has been closed, they were making yearly revenue of 532. Then yearly revenue projected this year was 772, but the previous quarter they made 137 crores, and the previous year quarter they made 137 crores, and this quarter they made 337 crores in one quarter, which is around 3 times the growth. Massive increase in revenue. As you can see, so it's in 93, 175% year-on-year growth in the revenue, and in PAT 93%. Beautifully. So what's the issue with this company is because since the Strait of Hormuz has been closed, so and too much uncertainty here, and now Iran is also planning to close the Red Sea. It's going down, which is the best opportunity to buy the stock, I think, in my point of view. Okay, so they signed a $11.5 million deal. They have 53% stake, majority stake in Fineotex Chemicals. Okay, and they are projected to they're projected with Crude Chem, which is the US subsidiary. So they have projected $68 million growth revenue for the Crude Chem company, right? And they'll increase this deal value to up to $200 million with Crude Chem. So before acquisition, it was 80,000 metric tons per annum, and now it's 1.5 lakh metric tons per annum. So it's around 1.8 times increase in the targets as well of the capacity they are making in the US, which is massive because chemicals manufacturing at this scale, and specialized chemical because even small amount of those chemicals go for high value because they are refining oil, right? So they cannot use any other substance for that. The ace investor Ashish Kacholia, so he held this stock for around 4 years, around 2.5% stake. Then he exited this quarter only 0.5% stake. He might have got some better opportunities, but from my perspective, this is a good buy, right? Then this is what I was saying. Crude Chem's revenue is targeted to $200 million, which was the target for 2030, but now it's the target for 2028. These are the fundamentals of the company. I'll look into it. Okay, So here's the company, Fineotex Chemicals. It's trading at price 40, decent price. It's a small cap company, 4600 crore market cap, quite less actually, but it does has a good ROCE and ROE. 13.5% return on equity is quite good. So it was mainly US is its major client and then Malaysia. So if US market is doing really well since the past year, it has gone up 8%, but Indian market has gone 11.5%. So I think it unlocks a new opportunity out there. If Indian markets are doing bad, it can gain value from there, right? So it's expected to give a good quarter, and it did. 377 crores of quarterly revenue. Great. Okay, so as you can see, the operating profit is increasing, the PAT is also increasing. It's every quarter, so there is straight increase, really nice. For the past year, it traded on 20, 25, 25, and then it rallied from here in April and May. So I think it does has a target of around 55 in my perspective. It's a small cap company, too early to bet on, but I think it's a good compounder because it can be caught early, right? So if I see yearly revenue, the PAT is 153 crores this year. This has been stagnant here, but I think it can do well. So the other thing I was talking about was the promoter holding, which is 62% here and 3% of FII's holding, which is relatively less, but the promoter holding is still intact. More of the public in this company as of now, but I think this is the stock you should look out for because it can either compound till 55 or 60, or it can be in the zone till the US markets are down because of their hardware.